Welcome to the nabtrade Guide to Fixed Income and Securities. I'm Mark Todd from the NAB Fixed Income team, and today I'd like to talk to you about the hybrid security market. A hybrid is a combination of debt and equity. The debt component is the trading margin, or for those investors would think of it as the income they achieve. And the equity is the conversion qualities. So in the event that a hybrid is called, it's what equity you'll receive from that conversion. The other component of the equity issue in a hybrid is the fact that hybrids are stapled with franking credits. So the investor who owns a hybrid security will have to make a tax claim to achieve the total benefit. For the purposes of this video, I'd like to focus on bank hybrids. There are corporate hybrids in the market, but the majority of issuance is from the banking sector. These securities are issued at a trading margin, and that is a trading margin above a reference rate, and that will be the bank bill swap rate. For those investors at home, think of it as a floating rate mortgage where you pay a trading margin above the bank bill swap rate. It's the equivalent for funding for the bank. They'll pay a reference rate and they'll pay a margin above that reference rate. And that will be a franked component to that reference rate. And so if you get 3.5, it'll be 3.5 over a 3-month BBSW or a 6-month BBSW. And that will include the franking component. Now, why do banks do this? Banks have what's called a capital stack, and it ranks the safer assets to the riskier assets. So if you think of a bank's capital stack, it would be term deposits, covered bonds, senior bonds, subordinated bonds, it'll be hybrids, and then it'll be equity. If I think of the returns I'll achieve, the safer the asset, or the perceived safer the asset in the form of a term deposit, would be lower than, let's say, the rate you'd achieve from equity. With all those various capital stacks, a bank who looks to fund itself will issue certain debt in each capital stack. In the hybrid stack, it would look at the cost of borrowing for the risks entailed. So the safer the asset, the lower the expected return, and the greater the risk, the greater perceived return you'll achieve. Hybrids have different features. A 7-year non-call 5, for example, would be at 5 years, it's the first opportunity for the bank to redeem, pay back your $100, or at 7 years, there's a mandatory conversion where you, the owner of the security, will receive equity. The other thing to think about with hybrids is the dividend policy. The dividend policy, like the equities, is at the discretion of the company. There's no guarantee that dividends will happen through the life of the security. One of the other risks that I think the investor should consider is the conversion from a hybrid security to the equity. There is no guarantee on the conversion number, on the amount of shares that you will receive. So in points of crisis, it might be that you'll end up with less equity in the entity that you anticipated at the start when you bought the original hybrid. I think it's important for the retail investor to understand the role of the Australian Prudential Regulation Authority, APRA. APRA is the banking regulator. And in the instance where the bank would like to redeem a bond or provide equity, it becomes subject to APRA approval. APRA wants to have a stable and robust banking sector. And so as a bank issuer of hybrids, they always go to their regulator and ask permission to redeem a bond or pay out in the form of equity. APRA's role within the banking sector is constant. When the bond is issued or when the security is issued, APRA has an ongoing relationship with that bank, and I think it's important for the retail investor to understand the role that APRA plays, which is one of guardian of the banking sector. All securities come with documentation, and I think it is very important for the retail investor to be mindful of the fact that you are obligated to read these documents. For those of you who aren't comfortable, don't have the financial literacy and would like to get further advice, there are numerous advisors out there in the market, so find the right advisor that's suitable for you and find out if any of these hybrid securities are the appropriate vehicle for you to earn some income, get the right investment tools, and get the right outcome. Thanks for taking the time. I hope you've enjoyed this video. I'm Mark Todd from the NAB on behalf of nabtrade. All the best.